Hey guys, how you going? So I'm just gonna do an update on my video that I've done 3 days ago. Today is the Friday 8th of May, and I'm just gonna do a quick video once again, similar to last one. I'm gonna include the SPY, gold, I'm gonna look at silver, I'm gonna look at gold silver ratio, I'm gonna look at SPY to SPX 500 ratio, I'm gonna look at Bitcoin dominance, and I'm gonna look at Ethereum versus Bitcoin. Alright, let's start here. So what we have is what we talked about last week is happening, I guess, but the important thing that we noted last time that I did the analysis, that we expected if the bears were to take control, then this bounce would be small here. But in case, what we've done is we bounced pretty high up here, and then we actually had a follow through yesterday as well. So yesterday was actually a very bullish day in the market, and a lot of the stocks actually ran a lot up because of this bullish day yesterday. So we got these zones here. I mean, we held this zone here, and we established this new support on the daily. So this is the new daily high or low, and it's key support right now. We cannot break this one if you are a bull, because then we will complete our head and shoulder pattern. Once we break this, that's going to be confirmed, and then we're going to go down. So excuse me. So that's why this is a key support right now established. So the other thing we're looking at is that we have went up a little bit higher, too high for it to come down so easily. So now we're likely to enter some sort of an equilibrium and stay between these two points. This resistance here at the top, which is this one here, which is 2972, and this bottom one, which is 2779. And at the same time, we have this intermediate support zone here, because we got action over here. We couldn't take over it, we couldn't stay over it. Then once we broke through it, we bounced off it and went higher, and then we went below it, then we couldn't break through it, and then we broke through now again. So that's another resistance in the middle there, resistance support. And if we zoom in just for a quick one, just to show you that the bounce has been pretty high. So this was the top, right, and then we had a massive sell-off. So we thought if we don't bounce too high, we're just going to come down and collapse. Let's say if we reject it from this area here, we went down and we went something like this, then yeah, we had a much bigger chance of breaking this support and forming the head and shoulder. But now that we've bounced so much, we're likely to just be stuck in this area here, which is about 7% range. So, and I've got my fib retracement from the top to the bottom here, and you can see this is the orange and yellow is the golden pocket here. So had a good break, but we bounced above the golden pocket here of the orange and yellow. So it's a high bounce, right? It's like almost getting up to the whole retracement. So so yeah, now we expect to bounce in this area, and it's going to be a bit of a choppy market probably, unless the volume comes in, because as we say, the volume has been decreasing the whole time. So we'll see what happens here. But the other key thing I guess I wanted to show is that this 21 EMA, right? 21 EMA is now holding. You can see it was resistance here. Then we broke it. We used it as a support over here. Then we bounced and formed a daily high low. We used it as a support. Now we went down again and wicked just below it and used it as a support again. So this would be a key EMA to hold now. EMA 21 EMA. So that's alright. So that's SPY basically. That's what I'm looking at right now. So I'm looking, number one, to stay within this range, and then if we break out, then we can reassess and see how much information we got. So let's have a look at gold. So gold. So we're still in the weekly channel. So if I go back to weekly time frame, we've got this channel which is happening for a long time, since 2018, as we did last time, and we're forming this inside bars. Look, this big bar here, the inside bar inside of it, and we're forming this inside bar, and we've got 14 hours to go, because today is Friday before we close, and we're likely to close an inside bar again. So what's happening is we're getting tighter on these inside bars, I guess, on the weekly candles here. So if we zoom in on the daily, what we have is these are the inside bars that are forming over here. So we've got the high, we've got the high low, we've got the low high, we've got the high low, and then over here it's starting to get pretty tight. So you can use this one as a lower high and this one as a high low if you zoom in on the 4 hour, right? 4 hour here. Look at it. So you got your high, you got your low, you got your lower high, you got your high low, and over here you got your lower high again, and then you got your high low. So this one we broke, right? So we broke this one, and now we're consolidating just at it. So my view is basically I entered a position on this break. And I put my stop over here at 1680 approximately. And as long as we don't break down below, I'm not going to stop out. And actually what I'm going to do, if we do go down here, I'm going to add another position down here to see if we can get continuation here, because you know, there is a thesis for gold to just keep going up. Because everybody in the market is now scared, and I think the hedge funds will start pouring money. They can start pouring money in. But if we break down, I'm just going to stop out, and I'm just going to wait and see what happens, and maybe try to get in again over here at the weekly channel. So that's on gold. At the same time, silver actually looks better than gold right now. And the main thesis is, you can see on the weekly here, we had this huge dump, and silver obviously is looking very, very weak. But because our fundamental theory is saying that gold should go up, and silver basically follows the gold as a precious metal and as a store of value and store of wealth. And it's been historically they use silver as money always when the fiat currencies have failed. So silver is looking stronger than gold right now, and what we can look at is gold-silver ratio, right? The higher this is, means that gold is more expensive, and the lower it is means silver is more expensive. So what we had is basically this. So look on the weekly here. Let's even look on the monthly, right? Let's look on the monthly real quick. So we had this rising wedge here happening, right? And we thought it was going to break down, but instead it held. And then we had a massive breakout here, and we had a massive breakout, and we basically reached 127.433, which is probably historically the highest gold to silver ratio ever, meaning that you can buy 126 ounces of silver for 1 ounce of gold at the top here. So now it's 110, right? So now it had this long week, and now we're looking at some sort of consolidation possibly happening. So what I'm looking here, going back to daily. So we reached this 126 high, and then we started consolidating. We formed a falling wedge kind of thing, which we broke out bull out of, and then we formed kind of like a head and shoulder pattern, right? Inverse head and shoulder pattern right here. So if we look, now we were looking, maybe this is a head and shoulder pattern. But what happened was, once we broke out above this resistance here, it faked out the first time, and then it faked out the second time, and then instead of going higher, we actually collapsed. And then at the same time, we were forming this grind line here. I'm not sure if you can see it. It's a little bit dark, so I'm just going to make it a bit thicker right there. So this blue line here, grind line or trend line, we were like trying to hold above it, held above it here, tried to break the inverse head and shoulder, failed, and now we broke and closed below this on the daily. So now we got another daily, happening, daily bar here, and we've got 15 hours to go. So if this bar closes below this ground line, we're likely to go down lower, and we're likely possibly to come down and retest this breakout wedge. You know, this long term. Sorry. Well, this is 100. This is 100 line. So sorry. So we're likely to test the wedge. This is the long-term wedge on the monthly that we were looking at. So we're likely to either hold 100 because 100 is just like a key level, you know, psychological. Possibly people will start buying up here and then we bounce. But if we close this below here, we've got no supports, and the next support is the 100 psychological. So I'm expecting it to go down in this area. And what that means is that silver is going up faster than gold. So silver possibly is a better buy right now. But if I go back to silver here, right, on the weekly, but if I zoom in on the daily, basically we're also breaking out of the sort of a resistance here. Yeah, so sorry. So yeah, we are basically breaking up versus this resistance, and I did enter a very small position in silver, but only because if we look at this resistance here, we have, and let's say we are using a 4-hour support as well, just like we are using in gold. Really, you're gonna have to use this support here. You know, you could try to use these supports here, or maybe this support, but your risk is much higher on silver because it just moves so much bigger, right? The moves are much bigger, so you got about 6% risk there, which is a big number. So that's why I'm using a smaller, much smaller position on silver than I got in gold, because gold is only about 2% risk. And what my plan is to actually buy more silver as we come down and as risk reduces, because maybe we will go up here and then we start to consolidate. So I want to buy more on the consolidation, and maybe at some support, like support over here, because that's the breakout. Maybe buy at 15.5. Got something here, 15.5, and possibly as we go lower, midpoint here, I'd use some pips as well to set up some level, and look, the 0382 lines up with the support here. So yeah, that's basically what my main thing wanted to say is that silver is looking a bit better than gold, and has been getting smashed, and it's so cheap versus gold historically. So it's much the cheapest it has ever been in history. So but that's why I want to, for long term, I want to buy some more silver as well as gold. So both of them, I'm expecting my fundamental thesis, both of them go up. And if you want me to explain why, I've explained it in previous videos, but I can explain it again if anybody wants to. So next thing I wanted to look at gold and silver here. The other thing I wanted to look at is gold versus SPY, right? SPX 100, that's the SPY futures. So, and I'm on the weekly time frame here, and what you remember, I was posting stuff on the Twitter or whatnot, but we had this huge equilibrium. So we got the low, we got the high, we got the higher low, lower high, higher low, and then we paused over here, broke out. This is the first signal of breakout over there, if you look here. And then there was also this breakout here out of this huge weekly or even monthly equilibrium. And once we broke out, basically we had a huge follow through on gold versus SPY, which means that gold is going up very fast. And this was the time, basically due to the coronavirus, we had the SPY dumping a lot at the same time as gold was sort of stationary and maybe even going up a little bit. Somewhere over here, like if you look at the gold, it did retrace a little bit, but not as much. And the gold has been basically stationary here, right? It's been in this range since the coronavirus dump over here. So it dumped, and then it basically gained everything back. very quickly, while SPY, didn't do that as quickly. And now gold is sort of still in this range, right? So in this range, you can even ignore the coronavirus dump, right? So if we're looking back at here, we're seeing that SPY now is having a huge bounce while gold is stationary or pulling back a little bit, and that's why the gold versus SPY ratio is dropping down. So now we are coming back down, and we are going to meet this support here. So you can see this support area with this red box. You can see we tried to break above it, failed, tried to break above it, failed, we failed, didn't even reach it. Then we tried again, we failed, we tried again, we failed, and then boom, we broke out here, and that's why we broke out with such huge power. Well, some people say because of coronavirus, but also technically, this is a really nice setup, and gold basically gained against SPY. And yeah, so now we should be bullish on gold versus SPY, and this is the time to buy gold versus the stock, because we have this support coming up here, but we also form this support here, and the most perfect thing for bulls to do is to form this as the let's have a look on the monthly here. We can start forming a bull flag here, although we do have long wicks here, but if we hold this support, then that's the optimum for bulls. But if we come down here, we always have this support here at 0.543, right? So looking at the daily on it, just to zoom in, to me it's looking like a bit of a falling wedges forming here, right? You can see a little bit of a falling wedge formation. Try to draw it like that. Like this, you can see it's getting tighter here and here, and every time we drop down, we don't get a lot of follow through, just a little bit of follow through, a little bit of a low, then we get a low high as well. So if we do break this support here, we still got the wedge support here, and we got this support here, so this could be a good buy zone over here for gold versus SPY. That's what I'm looking. So that's what I'm going to be looking at. I'm going to be looking at this wedge here, and that's why I'm bullish on gold, because we had this massive breakout, and I'd rather trade gold, or try to hold gold. I'd rather hold gold versus the stocks right now. But there's always Federal Reserve who's printing shitloads of money. And well, that's another thesis for gold. If it's printing shitloads of money, and all the stocks have been running for the last 20 years, 10 years, then gold, this is possibly a gold's time to shine for the next 10 years or so, as as all fiats currencies gets basically printed into oblivion. All right, so Bitcoin. Let's have a quick look at Bitcoin. So what we were looking at last time is we came up and tested this weekly resistance. This weekly resistance coming down line, and what I said was that we got to be careful here. We have the halving coming up. Halving coming up on 12th of May. So now we have about 4 days, right? 4 days to the halving event. So going back to weekly. So it's basically next week, right? So today is the 8th, and we got Tuesday. So I'm not sure exactly what time it's going to happen, but this halving. So this is basically a huge pump after the coronavirus liquidity dump once again. We had a huge bump. We broke above, right now we broke above this weekly resistance, and we're staying here. We still got 2 days, right? Because Bitcoin trades on the weekends as well. So we still have 2 days, and looking at this trend line, right? So what most likely scenario for me is we're gonna reject here, right? We've got the halving coming next week. We possibly reject here, and it's gonna be sell event kind of thing, because everybody is expecting this, and everybody knows. So the whales are basically pushing up the price up into the event, and once the event happens, they're gonna take the profit, and we're gonna try to form a high low on the weekly somewhere around 8,000 to 7,000 area. Optimally, we do a bit of a fib, so we got 7.7k 03 2 retracement, that would be perfect. If lined up with this support here, line up with all these massive supports here, that would be really nice. Or then we drop down to 0.618 and then we got this support here as well, kind of not far away. So that's what I'm looking at. And at the same time, if we do reject this wick here, look, we got this wick here, we got a wick, we got a wick, we got a small wick here, we got a small wick here, and now we are above it again, above this trend line. This just delete this one for now, but we got this trend line here and we are above it. So if we come down and close below this trend line once again, we're gonna have another long wick below at it, and that's gonna be that's gonna be a problem, right? That means the bulls are getting rejected, and we are once again this trend line is resistance. But if we do close above it, that will be a huge thing, I guess it'll be a huge thing. And at the same time, if we're looking at these two dotted lines, so we got what we were looking at last week, we got it's held over here, it rejected over here, it faked out over here, and now we're testing the second one, which is this one here, and it's got some action here as well, but basically we are in a very important area, which technically we can reject from, and it would be a good technical area to reject from at the same time as this halving event is happening as well. So if I zoom in on the daily here, also the daily here, so we had this we had this consolidation here, we had this high here, and then we went sideways for 7 days, right? 7 days just below the trend line here, below this resistance, and then basically yesterday we had a huge injection, we had a break, and we had a huge pump here, huge pump, and now we're doing a bit of a consolidation, right? We're doing a bit of consolidation, but we pumped almost 10%. So and the thing that I'm looking at, the volume is not that great. Look, this volume here is bigger than this volume here. So we're not getting increasing volume. We're getting the spikes. It's getting smaller. So what I'm thinking about is the whales. What they're doing, they're trying to trap all the retail. They're trying to create the hype around this halving event. Oh, the price is going up. The halving is happening. You better buy now. And then once we reach the halving, they're gonna crash the price, just like I was talking about last week, right? Last video. So this is what's still happening. And looking at the RSI on the daily here as well, it looks a bit dodgy to me, right? This sort of formation is a bit dodgy, We spike up and then we spike down spiking down real quickly. Well, this daily is not formed yet, 16 hours to go. But usually, I don't know, in my head for some reason, this type of formation, when it's forming, is causing me to think we are more bearish than bullish. So anyway, the main thing is that we got the halving, and we may run it or go sideways into the halving so that the whales can sell their bags that they've loaded up here and here and here to the public, to the retail traders, the moon boys or whatever you want to call them, and then they can crash the price. That's my main sort of thesis. We can always go higher, right? We can always just break out and go higher, but that's a more unlikely scenario. We are overbought on the daily, we are reducing the volume on the latest pump, and we are bought on the 4 hour. We got lower high here, but there is divergence here. So on the weekly, what have we got on the weekly? On the weekly, we broke through this trend line here that we were looking at, right? We broke through. So let's see if we close above it, and then maybe we can come back and retest it and see how the test is going to be once we start consolidating. So that'll be interesting to watch. But that's it for Bitcoin. This video is not as short as I thought. Wow. Anyway, yeah. So all right. So Now I'm gonna look at Bitcoin dominance. So Bitcoin dominance, looking on the weekly chart. So we were in this. Well, first of all, we dropped a lot since 2016. Then we were going up in this channel, long weekly channel, and then we started going down in this another channel here, and then we broke out bearish out of the long weekly channel. And then what happened was we excuse me a second. So yes, so as I was saying, yeah, so we broke below this channel, then we came and retested it, then we rejected, and now because of this halvening event, basically BTC dominance is gaining a lot of strength versus other cryptos as the halvening event, drives the price up. So now we're coming up and we're gonna test this weekly channel once again. We broke out bullish out of this descending channel, so it's going to be interesting to see the reaction over here, especially as the halvening hype is gonna stop once the halvening happens. So my thesis is we're gonna come test it and then we're gonna reject it because of the sell the news event. This is my main thesis, right? But it could always, I could always be wrong, but that's why you use stop losses if you are trading based on this thesis. So that's what I wanted to look at, and at the same time I just wanted to quickly have a look at the Ethereum versus BTC. So if we quickly look at Ethereum here, Ethereum has had a bounce as well, just as Bitcoin did, but it has stopped in this golden pocket zones. You can see the orange and yellow. It has been weaker last few days than Bitcoin. You can see here we had the bounce and Bitcoin is up here, but Ethereum is nowhere there. It's just consolidating, and it's been it hasn't had as much strength as Bitcoin has. And it makes sense because of the whales are pushing the price up due to the halvening event. So Ethereum has been losing against Bitcoin, and if we look at the Ethereum versus Bitcoin, it had a massive dump. It's had this range over here, it had the range over here, and then we broke bearish, and then we had a massive follow through bearish on it. So looking at it on weekly right now, we're coming down, and we have this support here, which we bounced last time, right? We have the support here, and we have the support over here. We've got some action here, some here, over here. Then once we broke above this one, we had a massive run. So now we're coming to test it again. So this would be a good time to actually next, in this week and next week, if we come down here, it would be a good time to try to buy Ethereum instead of Bitcoin, because you're expecting Ethereum to bounce more so than Bitcoin. But it depends on your plan. This is Ethereum versus Bitcoin. So if Bitcoin is going down and Ethereum is just going down slower than Bitcoin, then you'd rather hold cash than either currency. But if both of them are still going up, then you'd rather hold Ethereum than Bitcoin, especially because after the halvening, which is in for whatever days, you're going to have no hype for Bitcoin, but you're going to have Ethereum 0.20 hype gaining more momentum than the Bitcoin. So maybe we're going to have a bounce here. We're going to have a equilibrium setup in this area. So do like that. Maybe we're going to be in this triangle here, Ethereum versus Bitcoin. Alright, so that's all I wanted to say, and thank you very much for watching. The video turned out a bit longer than I thought, so maybe I'll try to make it faster next time. Thanks, bye.